Hey, welcome back to The Dive. Today on the show, we're joined by David Garofalo from Gold Royalty Corp. But before we bring him on, I'm just going to remind you to give that subscribe button a quick tap. Hey, David, welcome to The Dive.
Hi, thank you for having me on, Cassandra.
Okay, so let's start talking about gold. The price has bounced back in recent months. What do you think will drive the price of gold higher at this point?
Well, I think it's the advent of inflation, which we haven't seen in a very long time, but we've had such an accommodative environment for monetary policy, very low interest rates, in fact, negative real rates, and in some cases, real nominal rates as well in negative territory. We've had massive expansions of monetary supply, and we're starting to see the early evidence of that inflation. Headline numbers were above 4% for the first time in a long time. I think that surprised the market, and we're starting to see gold regain momentum. The other avenue that I think will result in more capital being allocated to gold is, admittedly, the cryptocurrencies have stolen some of our thunder. They've captured some of the new investors in the space looking for reserve or protection against fiat currency expansion. And we're starting to recapture some of that market share back because I think the realization is coming to these investors that cryptocurrencies, one, don't have any physical backing. There's really nothing backing them other than zeros and ones. And also, there are no barriers to entry into the cryptocurrency market. Somebody could invent another cryptocurrency tomorrow to capture market share. It really undermines the value proposition, the reserve proposition that the cryptocurrency advocates are trying to espouse, in my view.
Okay, so let's talk about Gold Royalty Corp. What's the high-level overview?
Well, we just IPO'd the company about 3 months ago and raised $90 million US and achieved a $200 million US post-money valuation. We're traded on the New York Stock Exchange under the GROY symbol. We're trading right around our IPO price, so we've maintained value, maintained our currency. We started with a spin out of royalties from our parent company, Gold Mining Inc., which is supported by a mineral endowment of over 26 million ounces of gold reserve and resource and 31 million ounces of gold equivalent when you include the substantial amounts of copper byproduct and a couple of deposits and also silver byproduct. So we have significant exposure in our royalty portfolio, predominantly to gold, but also to copper, which is obviously reaching new highs every day, given the bull market that we see for base metals. And so we've got that mineral endowment, that foundational element. And what we're doing now is systematically starting to diversify the portfolio with other royalty acquisitions. And with $90 million raised in the IPO, we have a lot of gunpowder, firepower to use in the market to acquire new royalty opportunities.
So what is the criteria for selecting projects or streams to add to the portfolio?
Well, primarily we're focused on precious metals. And I would say if you look at the significant proliferation of other new royalty vehicles the last couple of years, many of them are not focused on gold. They're quite diversified in their offerings. So we're still offering a gold-focused vehicle. We're really predominantly in the Americas, so we have low political risk, and we have maximum leverage to the gold price. We're looking for opportunities that have near-term cash flow, but significant exploration upside. And that's the attractiveness of a royalty vehicle, in that it offers you all of the upside in terms of the gold price, offers you all of the upside in exploration as well. So if our operating partners are successful in growing their reserves, we participate fully in that. And also what we do is insulate our investors from the risk of operation. In other words, operating cost inflation, capital cost inflation. We're completely insulated from that because our exposure is entirely to the top line, to the revenue, not to the operating costs.
So how does the company diligence each project?
Well, we actually have a very strong technical team led by Alistair Still, our Director of Technical Services. Alistair is a geologist by training, but actually was a senior mine operator at Gold Corp in our Porcupine operations in Ontario, Canada. And then subsequent to that, he built our Cerro Negro mine in Argentina. So he worked with me at Gold Corp. We brought him back to Vancouver. He was in the corporate development group, and we were able to recruit him away from Newmont post the merger and bring him in to run our technical services group. So he brings a strong team, strong subject matter experts that he can tap into, a network of them as we evaluate these opportunities. We start with the geological model. We have to be convinced that there's strong intrinsic value in the reserves and resources in the ground, and exploration upside, so we can provide leverage to our investors to the exploration success of our operating partners.
Historically, how has the company gone about placing an acquisition price on a project or royalty?
What we're looking for is strong rates of return. Typically, we're looking for double-digit rates of return on the capital we're investing in these opportunities. And we're investing capital in a few ways. Sometimes we're acquiring or looking to acquire existing royalties from prospectors that are looking to monetize from their exploration success. Sometimes we're actually investing in the ground through exploration or through mine development and taking royalties back with an expectation of that royalty generating cash flow over time. And we're modeling it like anybody else would, a net present value model valuation. And we're looking for at least a 10% rate of return for our shareholders, if not far and above that, with none of the exploration upside factored into our rate of return calculation. So that's gravy. And so we don't pay for that. That entirely accrues to our investors or shareholders if our operating partners are successful in their exploration efforts.
Is there ever a fear that a royalty structure can risk a project's ability to obtain financing?
It's an excellent question. So it's very, very important that when we put these royalties onto these projects, that we don't overburden them and undermine the fundamental economics of the project as they look to raise capital, whether it's debt or equity financing, to fund the construction. And that's why it's important that we've made up our board and management with operating people that have been operating mining companies for decades. My background is over 30 years of running mining companies, most recently Gold Corp and Hudbay Minerals before that, as CEO, CFO of Agnico Eagle for 12 years and treasurer over at Inmet for 8 years. So over 30 years where I've been responsible for running a broad array of operating assets, but also building 15 mines over my careers. So we have a clear-eyed view of how operators think, what they need to be successful. And what we're trying to do is facilitate their success. We're providing them a source of low-cost capital to help fund their development opportunities.
Okay, David, so last question here. For investors watching this, are there any near-term milestones or events they should be looking out for?
Well, as I said, we've raised $90 million US. We had a very successful IPO. We actually upsized the IPO 2 times, tripled the size of our initial raise from $30 million to $90 million. So we have by far the highest liquidity among our early stage junior royalty players. And so we are very competitive, and we are likely to make some significant acquisitions over the coming weeks and months to further diversify our portfolio and grow our royalty portfolio beyond what we inherited from gold mining when they spun us out a few months ago.
All right. Well, thank you so much for joining us on the show today, David.
Thanks for having me on.
Thanks for joining us. If you like our content, consider giving us a follow. Bye for now.